In this video, we're talking about OARK, O-A-R-K. It's a way to play Cathie Wood's ARK Funds without so much of the risk. It's more of a conservative way to play the ARK Funds, and it pays you a 55% dividend to do so. So here's our income. We're making about $104,000 per year. And as I said on the last video and on every video, we want to add to that. So we bought ARK Funds, but through OARK, we bought $1,000 worth, and it was down some in the day, and we added to it. We want to put about $5,000 in OARK, and so far, here it is below OARK, O-A-R-K. So it's here. We have $1,200 in it. We're at about a break even so far. We want to get it up to $5,000 because this dividend is too hard to pass up. Let's go check out ARK. We look at a snapshot of it, OARK. And yes, the dividend is 63%. It says, I want to say 55% on its website. Could be wrong. 55% current yield on its website. So I don't know. E-Trade sometimes has problems updating. You guys do the ultimate math yourself. If you want, we can do it together here. $10,000 divided by 1646. What do we get? 10,000 divided by 1646, which is the share price. And we get 607 shares. We do 607 shares times the earnings per share here, which are 0.7691. 0.7691 times 0.7691. 467 times 12 months, 5,600. So that on $10,000, that's 5,600 made. That's 56%. So we have a 56% dividend, as the fund's website says, in OARK. Now, let's look at a couple of other things that impact OARK's performance, such as NAV, erosion, decay. So I didn't really cover this in the first video for Tesla, but you should apply the same concept to Tesla. I commented on Tesla about how there's some distortion between the market price and the of OARK and the underlying of ARKK, and there could be some decay or NAV erosion as a result of the dividends either tapering off or the stock price tapering off, simply because when you sell covered call options on a fund, which is what Tesla does and also what OARK does, it sells covered calls and puts on ARK to replicate the ARK index. Well, it's not always going to be perfect. There are execution differences with options and underlying stocks. It's not perfect. Again, there's the dividend, which can fluctuate, and if things get called away from ARK because we went past the strike price, then it mutes the gains, it caps the gains, so that creates another form of distortion or NAV erosion, if you will. So let's look at the NAV erosion here and see how bad it was. So for ARK, and by the way, OARK, it covers ARK, ARKK, the ARK Innovation Fund. So of all the ARK funds, ARKW, ARKF for fintechs, it covers ARKK, ARKK, which is the most diversified index of Cathie Wood's ARK Fund. So I appreciated that fact. So it covers the ARK fund purely. You need to know that. And there is NAV erosion decay, as with Tesla, as with all covered call funds. But OARK also has strike prices at 42 and 40. Let's go to their website and we can see, we're back here on the site. We can look at their holdings, top 10 holdings. And we have strike prices of 42 and 40 for ARK, 42 and 40. It also holds treasuries like Tesla as a form of collateral and extra income in the process. Here are the treasuries here, 46% in treasuries. So extra income there through the treasuries. Now, 42 and 40 was a strike price. So let's go look at ARK's strike price and current price and see how the NAV erosion is working. Is there a good correlation between ARKK and OARK? because all we want is correlation. We want the dividend, yes, and some people want the performance of an ARK fund. They should just buy the ARK funds outright if they really want those nice gains. But I just want the dividend, and I want correlation with the dividend. I don't want crazy price performance everywhere that I can't predict. I want it to generally go in line with the ARK funds, which is good enough. So it's like basically if the ARK funds stay alive, then the dividend stays alive. This is just a dividend vehicle for me. I'll take any dividend vehicle. USOI, check out that dividend. It's pretty large, and there's a lot of NAV erosion in the process. But if I just take that large dividend and just multiply it times, in this case, 50% on ARK funds times 2 years, well, then the payback has already happened, and we're already cash flowing the assets. So as long as ARK is staying alive, and then our dividends are staying alive. Now, if the stock stays sideways to that point or drops, then the dividends are going to drop since the premiums are dropping. So that's something to be aware of. But even a 10% dividend on this would mean that you cash flow in 10 years, because 10% times 10 years is 100%. So I think you'll cash flow this within 10 years on a 50% dividend, because the premium should stay high for ARK and Tesla since they are volatile funds. Tesla will always have demand for its stock since it's in the S&P and NASDAQ, and ARK will always have demand for its funds because it's an innovation fund with a lot of disruption technology that are basically small caps of technology. So there's always going to be volatility and demand for that as well. So again, now back to the NAV erosion. So 42 and 40 for ARK. Now the price is at almost 40, so 39.58. So there's going to be one tranche of calls that get called away past 40, and then there's going to be another tranche of calls that get called away past 42, and we're not far from that now. So you should see upside capped in ARK. However, again, we're not in it for that. Even if you go to the prospectus, it says for OARK and Tesla, this is not for price appreciation. This is for steady dividends. It's just, why wouldn't you buy any other dividend fund then? Because these have high dividends from the high options premium they generate since they're volatile. So looking at ARK, here you can see, since we're going to look back to December, because that's when OARK was launched. So back to December, November, December, you see we're fluctuating around this gray line, which is 40. See 40 and the gray line next to it. So December 40. Okay, we touched 42 briefly, which is this 200-day moving average. That looks like about 42. So it looks like 40 and 42 is the range, and that's why they have the calls, the strike prices for the calls. They look like strategic areas. 40, that's the resistance, and 42 is the breakout. So if we get past this point, ARK has a huge move higher. They're going to take losses on those calls, and it's going to, again, cap that upside. They're going to get called away. So this fund will not perform the way that you necessarily want it to perform. However, you're still going to collect high premiums on it regardless, especially if it moves higher. You're going to get called away, but they're going to re-roll calls to higher strike prices. So, and then they'll sell puts at lower strike prices, I would imagine, because they sell puts and calls, and they do synthetic calls, which they don't even have to own the underlying to do this. So there is also risk there, and there's synthetic calls. Remember that. It's not always going to be a 1-for-1 correlation, therefore, because of the synthetic call risk. I found that on the prospectus. Let me just go back to OARK now. And if you can remember this chart, remember one more time, from 40 to 42, from December, right? Because this is where OARK starts. We're on ARKK right now. So looking here at November, remember this price, because we're going to match it up against OARK now. Okay, 42 and 40. From 39 to, let's say, 42, that is 7.5% upside. Okay, so 42 is about 8% upside. Okay, now we go to OARK. Okay, OARK, I hope you're staying with me, because I told you in the last video, this is all spitballing. I have no idea how to do these funds. I'm only going off past experience with other funds. Okay, OARK, which there's never really been a fund like this for stocks. And, USOI has extremely high call income that it gets from call options, but that's on an ETF, on an index for oil and gas. I mean, this is totally uncharted waters here. So now we're in OARK, and we're looking at it from December, and it was at 20 before, and now it's at 16. So 20 in December, here, and it's at 16 now. So that 20 to 16, there looks like there's some NAV erosion there. 25%, and 20%. So we saw a 20% drop on the underlying, it looks like, in OARK, because from December in OARK we were at 20, and now we're at 16. We even almost tagged 15 there. So we're at 16, and yet from December, if we go back to ARKK, okay, ARKK, we go back, remember those price points. It's hard to overlap the charts to compare. So I have to go back and do it like this. December, we were at 40, okay, in ARK, and we're still at 40. So there really has been no drop in the underlying ARK fund. So that would show that there is NAV erosion there. Once again, from December, we have had zero price change from ARK. The underlying is basically show that the price is even higher since December. So since the beginning of December, end of November, beginning of December, we're at about 39. And we're at about 40 here now. So we're kind of unchanged for the last few months. And yet, again, I say again, OARK has fallen about 20%. Now, is that a good thing? Does that make it a good investment? Well, in that same time period, you were getting monthly dividends of about 55%. Let's just say 5% a month. So it's been out 4 months. So 4 months times 5%, that's 20%. So that kind of makes up for the NAV erosion. The fact that you've had the dividend, you collected the dividend. ARK funds have gone sideways, but and OARK has dropped, but the dividends have made it almost an equivalent amount that you'd be almost break even on both funds right now. So does this mean that it's a good investment? Well, again, I'm a dividend squirrel, so I'm looking for anything. I get kind of nutty when it comes to dividend funds. I want anything that pays a nice dividend. And as long as the security or the underlying is safe and not going anywhere, and the dividend should be maintained to a relative degree, then I'm going to buy that fund anytime. And I do like ARK funds, and I do like Tesla, so it's a great way to play it without the volatility and without the risk and the outright stock. And the dividend eventually pays for the position. Now, you might not make it, you might not compound your wealth and be a millionaire in something like Tesla, because Tesla could make you a millionaire if you just let's say $10,000 compound over time. But if you let 55% compound over time, 55% dividends, which should be able to be maintained if the stocks remain elevated in price and in volatility, then you could see a double of your shares perhaps quicker than in a Tesla outright. So, there are some pros and cons of this fund. It's very new. It's hard to say what the true outcome is going to be for these funds. But so far, I like the idea of it. Yes, yeah, we see some decay, some NAV erosion, but that's being offset by the dividend. And when the stock does have a dividend, by the way, be aware that it will drop by that equivalent amount at that time. So OARK, when is the next time that OARK report has its dividend? When is the X date? It is on the 8th. So if you get in by the 7th of this month, you will receive this dividend. So you have to get in before that X date to get this dividend. And again, if the stock is going sideways, and if the management company of OARK can buy and sell calls and puts strategically in this range that ARK is trading in, ARKK, then you could be outperforming the market with this strategy, with this cover call strategy. I mean, when things have big runs like ARK has had a little over 6 months ago, it had a big run off the lows, and now it's just digesting and going sideways. This is when you want to sell covered calls. So I think this will do it for the video. Let's look at our performance and value to close out this video. Shows that we're up here almost 16%. We haven't updated from today, though. Today was a decent day, up 1%. $7,000 is always nice, but it's not about that, as I say all the time, because one day you're going to see in there I'm down 20,000 or 15,000 in a day. But it's only I would only be down about 2%. If I'm down 12,000, then I'm down 2%, which is kind of a normal down day in the market. Normal, it's a big down day, but it's rather normal. So percentages, what was the market down today? Dow was up 0.98, NASDAQ down 0.27, S&P up 0.37. So we beat everything, including the Dow. This is how you want to do it. Is our performance erratic? No, because we're beating the market, as you can see. Even when we had the drawdown recently from the SVB fallout, we're now recovering nicely. We were formerly up 30%. Now, see here, 29%. Now we're only up 15%, but this should catch up in performance as our new allocation of funds outperforms our old allocation of funds, where we upgraded a lot of these we upgraded to a lot of these 4 and 5 star funds. We had them already, but we went more overweight in these funds. I've done lots of videos on these funds. Check them out. Cornerstone 4-star, Go 4-star, JEPI USA, BDJ 4-star. Just did a video on that. So check those out if you're interested. That's where a bulk of all of our income comes from. But to keep things exciting, we have ARK and we have Tesla and we have these other stocks. We got into bank stocks recently and things like that. So these keep things exciting, and they give us the dividend. Here's Whirlpool. Just did a video on that earlier today. I'm buying that on any weakness. I'm going to keep it at 1,000, of course. If we have 1,000, and it's just like an OARK or Tesla, if we have 1,000 and it falls $500, well, we're just going to keep rebalancing 500 and 500. We're always going to keep it at 1,000. These stock specific things, like Tesla, OARK, we're going to get it up to 5,000 because that's what a lot of these more risque funds are at. 5,000 here, as you can see, 5,000. That's where I feel comfortable owning an ARK, an OARK. So. Yeah, would you guys want to put more money in that? Let me know in the comments. Would you put more money in OARK than 5,000? What percentage of your portfolio would you risk in OARK and Tesla? I'd be interested to know that. So margins down to 300. It was at 304. We took more profits in UPRO today and TQQ. UPRO right here. We had 12K in each in TQQ, but now they're down to 10K. So we keep rebalancing those. That's why you see a realized gain here, which I didn't even want to take that because now I got to pay taxes on that. So anyway, those are just a couple little other comments I wanted to throw in there. If you follow the channel. Other than that, what we just did with ARK Funds through OARK, I thought it was a creative way to get more income on top of the current dividends that we're earning. So thanks for the suggestions. All my subscribers are really cool. They give me a lot of good ideas, a lot of good feedback. So please keep that coming, and I'll talk to you soon. Thanks.